Hey guys, Mau here. SpaceX is finally going public, and investors everywhere are excited about the opportunity to own one of the most innovative companies of our generation. But before rushing into this IPO, it's important to understand what an IPO, an initial public offering, actually represents. An initial public offering serves two major purposes. First, it allows existing investors and early stakeholders in the company an opportunity to monetize part of their investment. Some of SpaceX's early backers include Founders Fund, Fidelity, Google, and various other venture capital firms that have supported the company through its private growth stages. Second, IPOs provide companies access to fresh capital to fund future expansions. In SpaceX's case, that means continued investment into Starlink, Starship development, artificial intelligence initiatives, and broader ambitions around the space exploration program. I want to talk to you about valuation. SpaceX generated approximately $18 billion in revenue during 2025, representing about 33% year-over-year growth. Reports indicate that the IPO is targeting a valuation of $1.75 trillion, or raising approximately $75 billion at around $135 per share. That implies that investors are paying roughly 94 times the trailing revenue. For perspective, that's an extraordinarily high multiple, even for an exceptional business. None of this suggests that SpaceX is a bad company, and in fact, it may very well continue changing industries for decades to come. However, great companies do not always translate into a great investment at every price. History teaches us that IPO enthusiasm often leads investors to focus on the story rather than the valuation. Many IPOs experience substantial volatility after going public as markets try to determine a more appropriate price. The question investors should ask isn't, is SpaceX an incredible company? The real question is, at this valuation, what future growth expectations am I already paying for? As fiduciaries, we believe investment decisions should be grounded in disciplined analysis, proper valuation frameworks, and an understanding that excitement alone is not an investment strategy. The bottom line is that SpaceX may be revolutionary, but even revolutionary companies deserve careful evaluation before becoming a part of a long-term investment portfolio. I'm Mau Sanchez with Portafolio Capital. Remember, successful investing isn't about chasing the headlines. It's more so about disciplined portfolio construction over time.